Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look at Chapter 5, Activity 5. In this activity, we're going to look at cash flow statement and how tangible asset note is incorporated into this question. Always make sure that you read your information. The given information relates to Hadley Limited. The company has an authorized share capital of 900,000 ordinary shares. This is the maximum that we've got available. The financial year ended on 28 February 2021. The same as in the previous activities. When you get your question paper and your answer booklet, familiarize yourself with the answer booklet and see what is expected of you to complete. We are required to calculate the missing figures, complete or prepare the cash flow statement, calculate the debt-equity ratio, and then you need to analyze the cash flow statement that you've completed, and you need to identify important decisions that were taken by the directors. Take note, to this point, we have done financial indicators by using the financial indicators to find missing figures. Now in this question, I've asked you to calculate the debt-equity ratio. In our next chapter, we are going to look at financial indicators in detail. So I'm slowly starting to introduce you to this, and it's important to see how financial indicators is asked in financial statements. You are given an extract from the income statement and the balance sheet, and then you are provided with additional information with regards to the fixed asset note, and the following is an extract from the note of the cash flow statement. So take note of how this is asked or given the information in a different way than what you've done in the previous activity. Question 5.1. To solve A, disposal of land and buildings, we have to take the balance in the beginning, the balance at the end, and the difference will equal the disposal. To calculate B, cost minus accumulate equals the carrying value. So if I want to calculate the cost, we need to take 840,000 plus 960,000. Number C, to get the carrying value in the beginning, cost minus accumulate equals the carrying value. To calculate D, disposal of equipment, we now need to look at what information is given to us. So they said a printer was bought for 150,000 on the 1st of March 2018, and that was sold at carrying value on the 31st of August 2020. Our accounting period ends 28 February 2021. So if you take note there, they didn't provide you with the accumulated depreciation on the asset which we disposed of in the beginning of this accounting period, which is the 1st of March 2020. This means we need to update our depreciation from the day that we've purchased it. Depreciation is calculated 10% per annum on cost. So if we're calculating it for the first time, we've purchased it on the 1st of March 2018. So in that first year, we're going to calculate it for 12 months. So my depreciation is equal to 15,000. Because it's calculated on cost, the depreciation in the second year would also be equal to 15,000. You could have also said 150,000 times 10% times 24 divided by 12. 24, 2 years. And that will provide you with the 50,000. To calculate the depreciation for this financial year, from the beginning of the accounting period until the day that we've sold it, we need to calculate it for 6 months. So my total accumulated depreciation is 15,000 plus 15,000 plus the 7,500. So if I want to calculate the carrying value, the book value, we're going to say 150,000 minus 50,000 minus 7,500. That equals the carrying value. And another word for that is the book value. To calculate E, the total depreciation on equipment for this accounting period, you need to take note by looking at the tangible asset. We've got old, remaining, that which we had since the beginning of the accounting period. There were additions, and then there were also disposal, which we've just calculated. So when you show your calculation, make sure that you show it specifically. We start with that which we sold. We've calculated in number D, so use the same answer that you've calculated there in E. On the new, the cost on the new was 400,000. The new printer was purchased on 31 August 2020. So calculating depreciation on the new is from the day we purchase it until the end of the accounting period, and that equals 6 months. The old, the remaining, that which we had for 12 months, is my cost in the beginning times 10%. So my total depreciation is that which we've sold plus the new plus the old. We are now going to look at the cash flow statement, but we're going to look at each activity. We're starting with the operating activity. If I look at the operating activity, they've provided or they've given you the interest paid, and then we've got cash generated from operation. So if you refer to information D, the following is an extract from note 1 to the cash flow statement, reconciliation between net profit before tax and cash generated from operation. So I need to use these figures given to calculate the cash generated from operations. So we are going to take the difference, and that will appear as cash generated from operation. Cash generated from operating activity, interest paid, dividends paid, tax paid consists out of the operating activity. So this means the next thing that we're going to look at is dividends paid. As I've mentioned before in the previous activity, look at how the information is given to you when you calculate the dividends paid and decide if you need to open T accounts or not. If you look at dividends paid, it always consists out of that which was recommended at the end of last year. So this is the first part of your calculation. Then we've got interim dividends. If I look now at information E, share capital and dividends, authorized shares, 900,000. On the 1st of March 2020, there were 600,000 shares in issue. So I always make a timeline, make use of it, and I indicate when did we issue additional shares, was it recorded or not, to find out the balance in the beginning, and the same as with the repurchase of shares. So they said to you on the 1st of March, 600,000 shares were in issue. On 31 August 2020, an interim dividend of 243 cents per share was paid. This means that I need to calculate the dividends, the interim dividends that was paid out. Now, if you just go on and you look at the next bullet, on the 1st of November 2020, 40% of the unissued shares were issued for 1.8 million. So that was given to us. So if we look at our timeline, November, there was additional shares issued. They said to you specifically 40% of the unissued. If the authorized is 900,000 and we have 600,000 in issue, it means that we've got 300,000 available. That means we're going to take 300,000 times 40%. 120,000 additional shares were issued. Now, what is important to take note of, the interim dividends was paid out before the additional shares was issued. So to calculate our interim dividends, we're going to take 600,000 shares times 243 cents or 2 Rand 43 cents. And that equals the interim dividends that was paid out. In our calculation, make sure on your cash flow statement you show in brackets dividends paid is my balance at the end of last year, that which was declared, plus the interim dividends that was just calculated. Your answer must be in brackets because it's an outflow. So in this activity, in this case, it was not required for us to do T accounts. You needed to make sure that you know what was the number of shares in issue. I do not care about the final dividend. Why? It's not necessary to use that in my calculation for dividends paid, which appears in the cash flow statement. Now we need to calculate income tax paid. And to calculate income tax paid, we can open a T account. And we start with the balances brought down in the beginning and the balances at the end. Make sure that you always check in trade and other receivables as well as trade and other payables, and start with 2020. In 2020, we had SARS income tax as part of trade and other receivables. And in trade and other payables, it was 0. So this means that SARS owed us, it will appear on the debit side. My income tax for this accounting period, my income tax was given to me. At the end of this accounting period, SARS income tax in trade and other receivables was 0. So if I go down to trade and other payables, there's a balance of 51,950. This means balance brought down means balance carried down. Now we can find the missing figure, take the credit side minus everything on the debit side, and that equals the tax paid. Make sure you show your calculations in brackets. I could say the credit side, so we say 713,250 minus and minus, or you can say plus minus the income tax plus the balance at the end. This is a payment, so it must be shown in brackets. Now we can calculate the cash effect from the operating activity. Cash generated from operations minus interest paid minus dividends paid minus income tax paid equal the cash effect from the operating activity. If we look at the investing activity, the tangible asset note, the movement, additions and disposal forms part of this investing activity. So the total additions, we have to add the vehicles and equipment. The total disposal, we have to add land and buildings number A, which you've calculated, and number D for equipment, which you've calculated. So it's very important that you complete those questions. Do not leave it blank, because then I've got nothing to take to the investing activity on the cash flow statement. Make sure that your answers correspond. If we look at the financial assets, the fixed deposit, it stayed exactly the same, so there's no change. So showing this on the cash flow statement, fixed assets purchased, the total, and it must be in brackets, because it's an outflow. The proceeds of the sale of asset, we've calculated, no brackets, because this will be an inflow. So the total cash effect from the investing activity is minus plus equals. If we look at the financing activity, we need to look for ordinary share capital, the retained income note, and loans. Financing activity means we need finances. What is our options? We can borrow money or we can sell shares to the public. If I look at the information given to us, on the 1st of November 2020, 40% of the unissued shares were issued for 1.8 million. So they provided us with the figure. So on our cash flow statement, we're going to show proceeds from sale of shares 1.8 million. No brackets because it's an inflow. On 28th February, 5% of the issued shares were repurchased at 16 Rand each. So I now need to know what is the number of shares in issue. If I go back to my timeline, a reminder, 600,000 shares were in issue in the beginning. We had 300,000 shares available. 40% of the shares available were issued, which means that we now have 720,000 shares in issue. So to calculate the number of shares repurchased, we now need to take 720,000 times 5%, which means 36,000 shares were repurchased. So this is the difficulty in this question. If you didn't calculate the number of shares correctly, use a timeline. All we need to do now is we need to calculate the total repurchase price. If 36,000 shares were repurchased, we're going to times it by the total repurchase price at 16 Rand per share. And that will appear in my cash flow statement, repurchase of shares. Make sure that you show your calculation in brackets. This is an outflow, so it must be shown your final answer in brackets. If we look at the loan, there was no additional information. So we're going to go to the extract from the balance sheet. We're going to compare last year with this year. There's an increase, which means we borrowed more money, and the difference, 720,000, will be an inflow of cash. This is proceeds from loan. We have now completed the cash flow statement for the year ended 28th February. We've looked at the cash effect from operating activity, financing activity, and investing activity. Our last step is to calculate the net change in cash and cash equivalents. So the cash effect from the operating activities minus investing activities plus financing activities equals the net change. Our cash and cash equivalents in the beginning was given to us. The cash and cash equivalents at the end is given to us. If you take the net change plus the cash and cash equivalents in the beginning of the year, it should equal exactly the same amount. To calculate the debt equity ratio, we need to take our non-current liabilities divided by the shareholders' equity. Shareholders' equity always consists out of the ordinary share capital plus the retained income. We're going to take 2.1 million divided by the shareholders' equity 11,250,000. Take note, this is always 2-1. So our final answer, 2 decimal places, 0.1921. Now this is what we'll discuss in our next chapter. But if I look at this, we are at low financial risk. We are more reliant on own capital than borrowed capital. The cash flow statement reflects some important decisions taken by the directors apart from the loans. Identify 2 good decisions. Explain the effect of these decisions. So we are going to look at more than one option. This is now where we need to analyze the cash flow statement that you have prepared. So your answers will basically, the decisions that you decide to write down will be based on your answers. If I look at the first one, from the investing activity, fixed assets were purchased. Vehicles, 900,000 and equipment, 400,000. So in total, we've purchased 1.3 million. The reason for that is now we have more assets. This is the effect it will have on the company. More assets for capital growth and to generate additional income. Then we had the selling of assets. We had the proceeds from the sale of fixed assets. That consisted out of the land and buildings and the equipment. So what effect does this have on the company? It's an inflow of cash and it can be used to fund the purchase of the fixed assets. Another option that we've got is the proceeds from the sale of shares. And there was an inflow of 1.8 million. Again, this money was used for possibly to fund the fixed assets that was purchased. Remember, when we look at the financing activity, we need finances. There's a reason why we need money, because we want to do something with it. And we've invested in non-current assets. Thank you very much. This concludes chapter 5. I want to leave you with this quote. No more, I'll do it tomorrow. No more buts. No more, I can't. No more, it's too hard. No more, I'm tired. No more, waiting for it to get easier. No more, putting it off. I want to encourage you, when you look at this topic, financial statements, make sure that you've practiced through as many as possible past exam papers. This forms part of paper 1, and it's important to get as much as possible practice. I hope you have a wonderful day.